Major stock market indexes are nabbing new record highs at an unprecedented pace this year as a slew of companies benefiting from trillions of dollars in government stimulus and the COVID-19 vaccines rollout headline this year's best performing stocks. Here are the top 10 in the S&P 500. The tech-heavy Nasdaq, up 0.3% on Thursday, is also posting new highs this week and has climbed 21% this year, led by Moderna, Google parent Alphabet and chipmakers ASML and Nvidia. Boosted by blowout corporate earnings and trillions of dollars in government stimulus, the S&P 500 has surged more than 100% from its mid-pandemic low in March 2020, with big tech stocks leading most of the market's rally through the end of last year. This year, however, top stocks hail largely from resurgent industries hardest hit by the pandemic. Real estate was last year's second worst performing sector but is heading up gains in the S&P this year, surging 33% since January. Meanwhile, energy stocks have climbed 25% after plummeting nearly 34% in 2020. The majority of Wall Street is still very bullish because there is just so much stimulus, with infrastructure spending just around the corner, Oanda senior market analyst Ed Moya wrote in a Thursday note. The House has agreed to vote on the Senate's $1 trillion infrastructure bill by September 27, but Speaker Nancy Pelosi, Democrat California, has insisted she won't hold a vote until the Senate also moves on Democrats' $3.5 trillion budget resolution, a larger package filled with spending priorities that didn't make it into the bipartisan infrastructure bill. That bill is set to face opposition from moderate Democrats concerned over heightened spending. In a Monday note, Goldman Sachs analysts said they ultimately expect Congress will authorize another $3 trillion in fiscal support within the next few months. When the Federal Reserve will finally hit the brakes on its pandemic-era monetary stimulus, namely the $120 billion it's been buying in bonds each month to prop up the economic recovery. Last month, Goldman analysts said they believe the Fed will formally announce a reduction of about $15 billion by November. Market analyst Tom Essaye, founder and president of the Sevens Report, says such an amount could spark a knee-jerk drop in stocks that quickly abates. If the Fed begins tapering at a rate of $30 billion each month, however, Essaye says stocks would drop sharply, led by those in sectors hit hardest by the pandemic, including energy, materials and consumer discretionary. Stock market broke records with August winning streak, but September is historically one of the worst months for stocks. Forbes Senate passes $1.2 trillion infrastructure bill after months of negotiations. Here's what comes next for Biden's agenda, Forbes.